All right, today we're putting on our financial detective hats. We're looking at S&P Global, a true giant in the world of finance. And our main piece of evidence? Their latest quarterly report. Because buried deep inside all those numbers is a story about a massive and pretty surprising strategic pivot. Right out of the gate in their latest official filing, S&P Global dropped an absolute bombshell. They're planning to take a huge piece of their business, break it off, and launch it as a brand new separate company. And that right there is the big mystery we're here to solve. I mean, S&P Global is a powerhouse. They're at the top of their game. So why on earth would a company that's winning decide to literally split itself in two? That's the question, and the answer is hiding in their own report. Okay, so this is our main document, our evidence file. It's called a Form 10-Q. Just think of it like a mandatory, super detailed financial checkup that public companies have to release to the world every 3 months. It is packed with data, and it's got all the clues we need. And there it is, black and white, straight from the horse's mouth. This isn't a rumor, it's not speculation. The company is officially on record saying they're spinning off their mobility segment. It's going to become its own thing with its own stock ticker and all. So before we dive deeper, let's just make sure we're on the same page. What's a corporate spinoff? Well, it's basically when a big parent company takes one of its kids, the mobility division in this case, and says, go on, you're ready to move out. The new company gets its own bosses, its own stock, its own destiny. All right, let's really start dissecting this big split. To really get why they're separating one piece, we first have to understand the whole machine. What does S&P Global actually do every day?
See, it's not just one business. It's more like a collection of really powerful, distinct divisions. So let's take a look under the hood and see what those parts are.
Whoa. Okay, now this table is fascinating. Just look at the scale here. Market intelligence and ratings are the two absolute titans, each pulling in over 1.2 times billion dollars in just one quarter. But then check out the growth rates. Ratings and indices are popping with double-digit growth. And get this, even mobility, the segment they're planning to spin off, is growing at a really healthy 8%. This is not a failing business they're getting rid of. And this chart just paints the perfect picture, doesn't it? You can see those two massive pillars, ratings and market intelligence. Together, that's nearly 2/3 of the entire company's revenue. And then all the way at the bottom, you see mobility. It's still a huge business, but it's the smallest slice of the pie. Now that is a huge clue in our investigation. Okay, next up, let's talk about how they're building this whole empire. Because S&P Global is definitely not a company that just sits still. They are aggressively growing, and one of their favorite ways to do that is to buy other companies. You really can't understand this company's DNA without getting their massive appetite for acquisitions. They are constantly on the hunt, scanning the horizon for other firms that they can just pull into their ecosystem. And the report gives us a perfect play-by-play of this strategy. Just look at the pace. They're making big moves, and they're doing it consistently. And these aren't small deals either. That announced acquisition of With Intelligence, that's a $1.8 billion bet. It's a clear sign they're pouring resources into making their core businesses even stronger. So far, this all sounds incredibly positive, right? But these 10Q reports aren't just for good news. A company is legally required to tell you about all the potential things that could go wrong. So let's read the fine print. The company lays out a few key challenges. For a data company, cybersecurity is, of course, a huge one. They're always dealing with lawsuits and regulators. Competition's a constant threat, especially with AI changing everything. And remember all those companies they're buying? Well, actually making those mergers work is a risk in itself. And critically, they even list the spinoff itself as a risk. There's no guarantee it will all go off without a hitch. Okay, so we've seen the structure, we've seen the strategy, and we've seen the risks. Now, let's get to the bottom line. How is S&P Global actually doing? This is where our investigation really hits its climax. After digging through all the data, there's really only one conclusion you can come to. If you had any idea that this big split was happening because of financial trouble, forget it. The evidence points in the exact opposite direction. First, let's look at the top line. Revenue is up a very, very strong 9% year over year. For a company this huge, that's some seriously impressive growth. But this is where it gets really good. Their operating profit, that's the money they make from their core business, grew by a massive 17%. This shows they are getting a way more efficient and way more profitable. And here it is, the final number that really tells the whole story. Diluted earnings per share, what investors call EPS, skyrocketed by 24%. That means the value they are delivering back to their shareholders is growing at an absolutely incredible pace. And just as a quick reminder, EPS is one of the most important metrics for investors. A 24% jump is a massive green flag. It's a clear signal of incredible financial health, and it's a number that everyone watches like a hawk.
So, let's solve our mystery. Why split up? The answer isn't weakness. It's all about strength. S&P Global is doing so well that it can confidently spin off its smallest division to double down on what it does best: high-growth, high-profit businesses like ratings, market intelligence, and indices. It's a strategic move to become even more focused and even more powerful.
So by letting go of a good business, they're aiming to build an even greater one. The spinoff isn't an ending at all. It's a sharpening of their focus. And that leaves us with a final, really fascinating question. What does this newly streamlined, data-driven giant have planned for its next chapter?